Welcome to Lever Up Your Life. I'm Nate Barger. I went from prison time and bankruptcy to now owning over $200 million in real estate. I want to show you guys all the mistakes I made so you don't make the same mistakes. It's time you create massive wealth for yourself. Today we have a special guest on, guys. Many of you guys may know him, Neil Patel. He's crushing it in the SEO game. He's an entrepreneur. He came to America when he was 2 years old and landed up in California. Welcome to Lever Up. How you doing today, Neil?
I'm doing great. How are you?
Man, I'm doing amazing, man. Thank you so much for coming on the show, brother.
Yeah, thank you for having me. Really appreciate it.
Yep. So, man, I want the audience to know you can overcome anything. So part of my journey is, I went to prison when I was younger, went bankrupt, went to prison again. I was selling weed, drugs at the time. Now it's almost legal, but, back then they wanted to lock you up. Now, you had a different journey, though. You came to the United States when you were 2 years old, came to California, and, so you're a self-made millionaire, right?
I'm self-made, but let's go back to you. You went to prison, started yourself, went back to prison. Look at where you are now. People can change. People can do well. You're an inspiration for everyone. That's
Yeah,
amazing.
that's it. And that's what me and you are here to give back to people because, you got a book that talks about hustle, right? And the
Yeah.
one thing with me, I failed 20, 30, 40 times. I just kept failing, but I didn't give up. And I always had to hustle, but I didn't really have the clear direction. So, jumping in and looking at what you did, it's been amazing. You started your first business, your first real business at 16? No college experience, right? You went to tech school to get trained. Now, how do you do that?
Yeah, so most experience came from just learning. Like, you can go to school, it can teach you stuff, concepts, strategies, but the easiest way to learn is just go out there and do it. For most professions, not all, but for most professions, school's irrelevant. You don't need it. You can go listen to stuff on YouTube and get what you really need, learn faster, and implement what you're learning quicker than if you drove to school, sat in a classroom,
Mm-hmm.
spent months in one class having to take tests instead of just watching a video and just implementing whatever you're learning. So what allowed me to really get started was talking to a lot of people. I'd pick up the phone back then, just call people, figure out what they're doing, try to learn from them. The second thing that I was doing on a regular basis was I was reading articles. YouTube wasn't really popular back then, but reading articles, trying to learn, implement, go to conferences, learn, implement. And the biggest thing that really helped me get to where I am was just making a ton of mistakes. And I
Yep.
failed so many times, and I know you talked a little bit about that earlier. And as I failed, I just kept failing and failing, and sometimes I kept failing on the same thing over and over again. But eventually, it took me years to learn this. Eventually, what I ended up doing was I learned from my failures. I learned, all right, I made this mistake. This is why it didn't work. This is why it won't work in the future. Let me write it down and let me make sure I avoid making the same mistake over and over again. And eventually, what that did is it led me down a path of, yeah, I made all these tons of mistakes, but then I stopped making them. And then I
Mm-hmm.
started making less and less mistakes. And I'm not that smart, but what I did really well was I stopped making major mistakes and I started doing the things that you should be doing because all that was left was the stuff that you should be doing instead of, focusing your efforts on the things that would cause you to make blunders.
Well, that is you say you're not smart, but that is the smart part, right? The smart part is not giving up on your hopes and dreams, understanding there's so many I would say in America now, so many people they're getting it. At college, you know, I didn't go to college. I went to prison, right? But I asked people that went to college and they was like, "Yeah, the information they give it to you slow." It's almost like they intentionally take 4 years to give you 3 months worth of information. So I have a 13-week academy to show people how to become millionaires in real estate. And people are like, we open it up week by week, but people are like, "Can't you do it?" I said, "Look, man, I need you to digest. It's a lot of information." And then I had my sister take it, and she said, I learned more in this 13 weeks than I did in 4 years of college. And I said, that's intentional. If they gave you the college in 13 weeks, right? then it couldn't make any money off of you. And so I'm glad to hear your stance on that. Now, my daughter wants to be a doctor, and I told her the same thing. I said, you don't have to go to college. You just got to find some things to practice on. So she went and got a razor knife, and she was like, open up, Dad. So now, hey, look, me and Neil, we ain't hating on you if you want to go to college and be a doctor, but what we're telling you is that if you really want to gain financial security, man, you don't really need college.
No, but doctor, lawyer, I think some of those professions still require it, and it makes sense, right? For
Yep.
those, by all means, go to school, whatever it may be. Your daughter wants to go to college to be a doctor, good for her, right? Go make a
Mm-hmm.
difference, go help people. That's one of the best jobs out there. It's a really hard job, and it takes a long time because you're dealing with people's lives, and I get why it takes forever to become a doctor, but good for your daughter. That's an amazing job.
Yep. So I know there's a lot of people that they'll say, and I know the answer to this already, but they'll say, well, Neil and Nate were just at the right place at the right time. You know, I buy real estate. I was bankrupt 9 years ago. I got about 250 million in real estate right now, a clear path to $1 billion. You know, I'm self-made, come from just normal blue collar working family. And a lot of people will say, well, Neil was just lucky. He was in California. He was in Orange County. He was at the right place at the right time, right? What do you have to say to those people?
It's never right place, right time. I do think that's part of success. But I wasn't, when I say it wasn't really right place, right time, I wasn't really in there. For me back then, right place, right time would be same time, but in Silicon Valley instead of Orange County, which was
Mm-hmm.
a big difference back then. Now it doesn't really matter. Uh, I was talking to a venture capitalist years and years ago, probably 15 plus years ago, maybe a little bit more. His name was Guy Kawasaki. And Guy Kawasaki is one of the best things in investing is luck. He's like, that's something that you can't control, and it's one of the best factors. He's like, I would take luck over hard work or any of that. And it makes sense. I would too. But you can't always manufacture luck, right? It is a lot
Mm-hmm.
of it's right place, right time. Um, and the way I look at it and the way I see it is if I were someone, I wouldn't worry about right place anymore because you can do anything almost anywhere,
Mm-hmm.
especially if you're on the internet these days. For right time, you may not get in the right time right now, but if you're persistent, you keep at it, eventually you'll do something during the right time, right?
Mm-hmm.
So it's like for me, when I started out, it wasn't the right time either. But when you go for 20 years, eventually you land into something that is the right time.
Which I get back to, it's not luck. What, were you
Yeah,
unlucky the 50 times that you failed and just lucky this time? It was the
correct.
persistence. It was the persistence and what you talk about in your book about hustle. So that's why I wanted to ask you that. Break that down for us and let them know let them know your book, the name of your book and where they can get it at. You got a copy of it you can hold up?
I don't. Hustle, you can find it at Amazon. But I want you guys to think about this, right? I go to a lot of conferences, I speak all the time, and people are like, "Ah, how'd you become an overnight success?" One, I don't
Mm-hmm.
really think I'm successful, but it's just like, yes, I'm a 21-year overnight success. It just took me 21 years. And it's about persistency and just continually doing it. And you can end up making your own luck by just continually grinding away and being hard. But it's not just me and you. Everyone has most people who I've seen who became really wealthy, they got there because they kept at it. They had laser focus and they made a ton of mistakes along the way. Bill
Mm-hmm.
Gates made a ton of mistakes. Elon Musk has made a ton of mistakes. Mark Zuckerberg, in theory, based on his stock price, is making a ton of mistakes right now, right? Elon Musk, people don't realize there was a point in time, I believe it was like he had one attempt left to try to get a rocket up.
Yep.
Uh, and he couldn't, the first few attempts failed. He just kept at it.
Mm-hmm.
And he was on the
Mm-hmm.
verge of going bankrupt. I remember at one point with Tesla, he had a deal to sell it to Google because he couldn't make the numbers work. From a financial standpoint, he needed help. And then all of a sudden, he inked a deal with Daimler Chrysler, right? The Mercedes Chrysler, whatever that arm is called.
Mm-hmm. Mm-hmm.
And then he didn't end up selling to Google, right? One of the best moves in his life, and now he's the richest person. It was if he ended up selling to Google, it would have been the Google founders probably would have been the richest, person in the world or people in the world. But the
But
point I'm
but but
getting at
Elon
is
Musk, but even if he would have sold it, he would have went on to do something else, right?
he saw at SpaceX, right? So he would have done really well either way. But the guy was just persistent.
Yep.
Look at you.
That's it.
Uh, how
Persistence.
many times did it take you? How long? Or forget how many times you failed a lot. But how long did it take you to get to where you are in life before things really started clicking? How many years?
Well, listen, brother, it's exactly what's in your book, and I want you guys to go out and get his book, and here's why. When I was 5 years old, I started selling things in school. So I was learning to be an entrepreneur. By the time I was 22, I'd been in and out of prison twice with 4 felonies, got sent away to Ohio Veterans Children's Home when I was younger, military school. So I was failing and failing and failing and failing and failing. I never had a W-2 job in my life. At 29 years old, sold my last drugs. I'm 47 now, and I had no idea what to do. I really didn't. And I cried out to God, and he showed me real estate. And through that, I learned on the job. I lost. Now, I never really lost money on real estate, but I lost, when you look back, it was like I lost decades of time and progress trying to learn this stuff. Then ultimately, when I went bankrupt, and I said I never lost on real estate, I used the Burr method, meaning I got all my cash back, all my investors' cash back. The banks had some money in. But ultimately, when I came out in 2013, I probably failed hundreds of times, right? But when I came out of bankruptcy in 2013, I had exactly what you said. I had a clear path on exactly what I wanted to do. The distractions were no longer there. I was no longer chasing. Like I remember telling my partner, Mike, he said, well, we can make a little bit over $1 million on this deal. I said, man, I don't want to do that deal. And normal person say, why? Because it's going to take too much time. My time is worth more than that. So it's finding your value, but like you said, you got to have that laser-like focus. I know exactly where I'm going. And if it's not down that path, I'm not distracted. Oh, well, look over here. We can buy flags and sell them on eBay. Look, I don't care about none of that. We can flip this car. We can flip this apartment complex. No, I have a core focus right here. And I just told a lady this. I just came from walking a Hyatt hotel that she's building. She needs some help finishing it up. And I said, look, we have a clear path to $1 billion in real estate in 3 years. Me and my partner, Mike. I said, I don't want to be distracted by anything else. Although I would love to help you. I'll send some crews over here. This isn't something that I'm interested in doing right now unless I can own equity in it. Because the equity has to do with my goal, right, of accumulating assets, and which ultimately have to do with the goal of what? Becoming a philanthropist, giving back, because once you become wealthy, what do you like to do, brother?
Same. Oh, more so my wife does it. She loves giving back. I like making it. She likes giving back. We're not going to give our kids anything, or very little to nothing. I'll make sure they're not on the street. But other than that, they can go earn it like everyone else. And
But that's
it's
the
one
thing.
of
That's the thing you hear about people all the time. It is, see, and not to cut you off, brother, but look, man, I'm so passionate about that. For all you guys listening, you say, man, the thing that's, and I get it all the time, brother. I say, what's keeping you back? Money. I said, money's not keeping you back. If I was to give you $100,000 a day, what would you do with it? A lot of them say, I'd go buy this car. I said, man, you're going to kill my money? You're going to go kill my money. You're going to murder the money. Or I'd go buy a property. Okay, what kind of property would you buy? A house. Okay, what kind of financing would you get? What kind of appreciation would you expect to get? What kind of cash flow? What kind of tax incentives? What kind of basic jobs are you looking for to support? I don't know any of that. Then you're not ready to invest. Money's not really the problem, because once you know all that, you can go get unlimited capital, can't you?
That's right.
Because of the skill set that you've earned.
That's right. Now, earlier you mentioned the Burr method for real estate. Was it Burr method? Did I get it right? What's a Burr method?
All right, so it stands for buy, renovate, rent, refinance, repeat. Here, I'll give you an idea. I bought this. It's a flagged hotel, Courtyard Marriott Hotel. Bought it for $7 million. I'm putting $5 million in it. We're vertically integrated. We're doing our own construction. The bids came in at $8 million, but we can do it for $5 million because we're vertically integrated. We have our own construction company, so we're going to be all in that for.
Plus 8, so you're at 15.
No. 8 was the cost. We get it done for 5 because we're vertically integrated, right?
Okay, so 5 plus 7, so you're
12 million, 12.1 million to be exact. When we get done, it's going to appraise at 18 million. And we'll be done with that December 15th. 18 to 20 million, somewhere around in that. I'll go get a 75% loan out. Let's say it was 20 million. That's 15 million bucks. So we got all our original capital back. We pay our investors back. We pay off the original loan. We got a new loan of $15 million. We're valuing at an 8% cap rate, which means an 8% return. Well, 5 million of that 8 million is going to give us a return every year because we didn't leverage that. Does that make sense?
Yep.
So we got $5 million sitting there in equity that we're getting an 8% return on, which is $4 million a year. I mean, $400,000 a year in cash flow. On top of that, let's say we got a bank debt for 5.5%, but we're running a 2.5% margin on 15 million bucks. That's another 750,000 plus 400. That's $1.15 million a year in cash flow and principal reduction. Because out of that bottom 15 million, some of that's going to be principal reduction, paying down the debt. It's not actually going to be cash flow. So you make $1 million a year off this one property. Plus, you got $3 million in cash out that you don't have to pay taxes on. That's a BRRRR strategy. And it's in an area that is going to go up because Intel is building a huge chip plant, $100 billion chip plant, 14 miles from there. We're working on securing some accounts with them right now. It's the largest development in the history of the United States, private sector. Intel is building a huge plant out here in Columbus, Ohio, which is about an hour and a half from me. And we think that hotel is going to drive occupancy, and it's going to drive rate, which gives you what's called your average daily rate, and then your RevPAR, revenue per available room, is going to push. When that happens, now the hotel's worth $25 million. So you buy in these areas, and they just go up in value, but you do it with little to no money, because out of that, yeah, we had some startup money, but we were able to go to the bank and get all the money back.
So would you then end up flipping it once it gets like 25, or you just keep it for the cash flow?
It depends. A lot of it has to do with where the tax laws are at the time. If the tax laws are going to be heavy burden on us, then I'm not gonna sell it. I'm going to probably keep it and go do another refinance, pull another $3 or $4 or $5 million out, and still have cash flow, right? And then when it gets advantageous for us to sell or to take that money out, let's say we sell it, make $10 million. Well, if we take the $10 million and we go leverage that and go buy a $40 million asset and take that $40 million asset and put $10 million in it and then push the value of that to $80 million, it's all math. You know, at the end of the day, there's not, the emotion's not there. It's all mathematical decision.
See, I'm a buyer, not a seller. But like I look at real estate, I don't do tons of real estate. I used to do way more. But the beautiful part with that building, let's call it, it's worth $20 million. You also get your depreciation on the building too, which helps with the savings. And if it can go up to 25, you can also use quite a bit of that cash for leverage to just go do the whole model all over again and buy another one and just keep rolling and going.
Which is why we're buying hotels. Let me break down a hotel for you real quick. $7 million acquisition. How much did I pay for the hotel?
At the end, once you do
it all, at $7 million acquisition, what did I pay for the hotel?
Probably going to have to pay 25% at the beginning.
No. How much did I pay? How much was the hotel, the value of the hotel? $7 million. I didn't pay $7 million for the hotel. I paid $4.2 million for the hotel, right? I don't get how you got I paid $2.8 million for the flag, the fixtures, the furniture, and the equipment, right? Why?
Got it.
The $2.8 million that I was able to segregate out, and we were able to put expenses. How much is the bed in each room? How much is the TV in each room? How much is the bedding? How much is the kitchen stuff? We were able to take $2.8 million the day we bought it and create a paper tax write-off. So you talk about accelerated depreciation, right?
Yeah.
So you take that $2.8 million in accelerated depreciation, you go sell another asset off, make $2.5 million, they wipe each other out. If you're a real estate professional, you can do that. You don't have any non-passive loss limits. So when you say, oh, what are you going to do with it? It comes down to a mathematical problem. If we sell this thing and we have to recapture that depreciation upon sale and we don't have anywhere to put that money, we're probably just going to buy and hold it as long as it's in an area that we see is going to continue to go up in value. If it's an area that starts tapering off or our investors' internal rate of return starts tapering off, then you know it's time to sell.
No, that makes sense. I love it. I'm not that, again, I'm not a big real estate junkie. I've always loved it. It's just more so I stick to what I know, which tends to be tech. The
Well,
only real estate I've done apartment complexes. 196 unit was the biggest one. Did some condos that were distressed, made good money on that. And over the last few years, I've only done residential homes that I end up living in. And I'll tell you, I've always lost money on buying homes for myself. I've never once made a money. Like, oh, let me rephrase, post marriage. So pre being married, I always made money on real estate. This has nothing to do with my wife. But post marriage, I've always lost money on real estate because then I remember before I got married, I would always buy a home without even seeing it in person. I would just buy it based on the numbers and the deal and whatever it looked like online. And I always did really well. Some of these deals I was making 50% in less than 30 days. I know 60, 90 days,
wow.
3 months.
Wow.
And that was like the Mandarin Oriental was doing a fire sale in Las Vegas. Now it's called the Waldorf Astoria because they were renegotiating their bank loan. They needed 51% occupancy. So they had to sell the gray shell condos and they couldn't get home loans on them. So they were just
Mm.
doing fire sale. They needed them gone in 2, 3 days. And we were just me and a few friends were just cash closing on all of them. And they ended up being the penthouses. Then I tried figuring out how much work it would be to build them out. And the realtor's like, you can build it out and make a killing, or in 30 to 90 days, I can just flip them for you. She told me she can get me 60+%. I ended up with close to 50% returns on them. And I just didn't care because it was less than a 3 month hold period for most of
Mm-hmm.
them. And I was extremely happy with that. But, when I got married, had kids, started buying homes based on what the family wanted, that's when I started losing money.
Yeah, because it becomes not an investment. It becomes kind of like, this is like we had somebody come and offer us a million more than we paid for our house. And I wanted to take it, but my wife was like, it's like, and so it's like, what do you do? Um, it's utilitarian. But if you get any more of them deals in Vegas, and times are probably going to be coming up in the next 12 to 18 months where we're going to see some deals, man, call us, brother. I'd love to partner you with you. We'll syndicate capital. We'll do whatever we need to do. I like bigger assets now. Bigger assets, bigger return, easier to manage. But
Yeah,
man, I'd love if you get another deal like that. They said it's a once in a lifetime deal. Well, we find them every week, right? And so,
I love it.
but the
Yeah, no, it's funny too because it's like, remember how you said you wanted to end up selling your home and your wife didn't let you? We ended up buying a home in Beverly Hills of November of last year. We haven't even spent one day in it. All right, so let's just forget about how many days I spent there. Literally, haven't spent one day in the damn home. So we bought the home, and when we closed it, there was 14 bidders. The market was hot back then. It's not really that hot as much now. There was 14 bidders. I beat out one dude from Hong Kong. So I ended up being,
whoa,
so then he got pissed, and then we were in escrow. He came back a week later once we were in escrow because he couldn't back out. Technically, we closed the home in less than 2 weeks. And
wow,
the guy offered $1 million more. I said no. And then he offered, it ended up going to 1.4, 1.6 more. And then I went to my wife. I'm like, let's sell this shit. And it was friendly on the real estate commissions because he said he would pay for the commissions. So then it was truly my profit, right?
yep.
Because the problem is the moment you have to end up paying the 6%, three on each side, it starts adding up. And I told my wife, I'm like, let's take it. And then I wasn't able to take it.
Oh man.
Uh,
Well, what, how I know how you can get your money back. Come out with
oh, it's
this
already
shirt.
starting to go down.
No, you
It's
come out
already
with a
starting to
shirt
go
that
down.
says the real flex is turning down 1.4 million on a house.
Oh
You
no,
just got to sell a lot of shirts, man.
so we bought the house for 7.6. It was owned by a church. The Zillow shows 7.5. 100 of it went to the church. Technically still paid 7.6, but the way they wanted it done, I don't know why, it was 7.5 for the house, 100 to the church. It was someone owned it. Eventually they ended up passing away. It got donated to a church, which was part of their will. The church rented it out, and then market went like crazy, and then they're just like, oh, let's sell it. And when we were going through the whole process, you know, the house 1.4, 1.6, whatever the end price point ended up being that the guy would end up paying, that's a nice premium on that size of a house. Literally in less than a month, cash buyer.
Yep.
You know, I liked it. I was ready to do a deal. And then my wife picked an architect to redo the deal because the home is 96, 97 years old, something like
Mm-hmm.
that, almost
Mm-hmm.
100, a little bit less. So then the architect she hired $800,000 to redo the designs and the plan for the home. I'm like, this shit's expensive.
Yeah.
This is
Yeah.
just the architectural drawings.
Yep.
And then to build the house, we ended up getting quotes. We still haven't had city approval yet. We'll get it probably in 3-4 months, is my guess. Uh, you're talking about probably maybe actually 6 months for city approval. Beverly Hills is a little bit slow, but you're talking about maybe another $7 million to build it, and
Mm-hmm.
then furniture. So then let's call it. I'm all in
Like
around
20.
like I think 7.6 for the land, 7 for construction, interior designer fees. I don't know what that was. Let's call it 400. So I'm rounding. It's probably a little bit less than that.
Mm-hmm.
So now you're looking at 15, and
There's
then
16 million, brother, with furniture.
800 for the architects, and now you're at
Oh man.
15.8 plus furniture, and other miscellaneous stuff, city fees,
Oh man.
structural engineers. I don't know what other engineers we paid for, landscape, etc. So yeah, let's
You're 20
call it,
million bucks, huh?
yeah, probably 18 if I had a guess. But still, if I'm in $18 million, is this, you ain't gonna make money on that after property tax and holding it for a few years, market's going down. The resale value on that home once it's built, it would be 9,000 something square feet. You're roughly gonna get 2,000 a square foot, a little bit more maybe if it's
Yep.
new build and it's really nice, so maybe 20. But after fees and everything, there's no money to be made on this. It's more so, um, it's something for the family, and if the family's happy, I'm happy.
Well, will you use it though?
No. The crime is so high there. My wife's like, we're not living there. And we were never planning on living there, but we live in Vegas and the weather sucks here during the summer. So we're like, oh, we'll use it a little bit during the summer. The crime is just through the roof. I remember 2 weeks
In
ago,
Beverly Hills, the crime's bad.
oh, the crime is through the roof right now. It's one of the
Wow.
worst cities in crime ratings in
Wow. I
Southern.
didn't know that.
Yeah, it's terrible. They're having real high bad crime problems. The city just installed 2,000 more cameras on the streets.
Wow.
All the stores are getting robbed. It's because of laws. If you end up robbing and it's under a certain amount, they just let you
Oh
go.
God, that's insane, man.
So then they're just like, might as well rob the places where you're gonna make the most money if you ain't gonna go to jail,
Yeah,
right?
Beverly Hills. Beverly Hills, it is.
So there's a lot of gangs that just come through there and rob. But I remember there was a few weeks ago 4 people on 2 streets over robbing a lot of the homes. Cops started chasing them. Some of the guys were in our backyard. Again, I didn't spend any time there.
Wow.
One of my buddies lives in there, and I let him live in there for free because if you get squatters, then it's a whole nother problem with Southern
Mm.
California. But cops ended up knocking on the door, and they're like, "Hey, we think people are in your backyard." He's like, "Okay, you guys can go." And then they ended up getting someone, and then there was more people next door too. But they ended up getting them. It took them hours. I think the helicopters were there till like 3-4 hours, just trying to
Man,
chase
that's
them down.
insane, brother. That's a man. Is that going to be the next book you're writing?
No, no, no. On how to lose money on real estate, maybe. How not to do what I'm doing. If you want to make money in real estate, do not copy me.
Hey,
But
but
at
look,
this point,
you've done extremely well in tech. And man, I was reading a book and it talked about what wealthy people are diversified. And I don't really believe in diversification.
uh, uh, okay, so they say a lot of people who have made money are diversified. I'll tell you this. Most of the wealthy people that I know who have hundreds of millions, if not billions of dollars, I know a few people who are on the Forbes list and I know them quite well. Most of us, almost, if I had to look at most of my friends that have over $500 million in net worth, to over a billion, almost all of us made our money through one thing,
Yep. Yep.
right? And then we end up diversifying, but it wasn't always choice. So like you can say I'm diversified because I have a expensive home in Vegas. I have another
Mm-hmm.
one in Beverly Hills. I only have 2 homes. The Vegas one and Beverly Hills one, technically I didn't build out the Beverly Hills one, so I considered only 7.6. The Vegas one cost to build will be somewhere around $17 million all in. Um, so let's call it, if I build both homes, I have close to 35 to 40 million in real estate, although market's going to go down, so maybe 30 if I'm unlucky. Now,
Mm-hmm.
when you think about that, I don't really look at that as diversification. It was
Yep.
more so they were bought because it was for the family. It had nothing to do with let me invest in that. And then I'm in some hedge funds. I'm in some private equity funds. I'm in a lot of venture funds, in a lot of stocks. But a lot of us do this stuff because you got to figure out ways to park your money and make it work for you, while we focus on our main business or the core thing that we love.
Mm-hmm.
While, I was watching someone on Instagram and they're just like, did you know the average millionaire has like something like, I think 12 or 13 or 7, I don't know what income streams it is. And and
But
I'm
but
like,
that's not rich though. I mean, that's
no, yeah, and then here's the other thing. Most people are millionaires in the United States because their home went up in value.
yep, yep.
Like if you just cut out the bullshit, most people bought a home a long time ago. They're older, their mortgage was low. They ended up paying it off, and after 30 years, that thing went up, and they're a millionaire.
And,
That
and,
is how
and that's
most people became a millionaire.
that's the thing that the people I try to reach. Like, you don't have to work until you're 60 years old and give this corporate job all your time, all your good time. Then you look back and your kids are grown and you say, boy, I wish I would have did this or did that with them, which gets into your book about hustle. And so diversification, guys, you heard it here. When you become, I would say the people that tell you to diversify, they tell middle class to diversify, right? Maybe, but when you become wealthy, people become experts in what they do. They have a laser like focus and they're not afraid to be all the way in on it because they understand that they control the outcome. So,
Yeah, you
go
got to
ahead.
focus on it. Look, if you're middle class, I still tell you focus, don't diversify. If you're really wealthy and you make money, you'll end up diversifying not because you're trying to diversify, is because you'll start you won't be able to
You
keep
got too much
pushing
money.
it.
Mm-hmm.
Yeah, you won't be able to allocate all your cash flow into your main core business at a certain point. Sometimes the timing's bad or whatnot. So you got to park some of the money in T-bills or stocks or other investments. So you naturally become diversified. But if you're trying to generate wealth, the way you start off when you're out there, whatever level you're at, whether you're starting off or you're middle class or you're somewhat rich and you're a millionaire, I say have laser focus.
Yep.
If you want to do real estate, do real estate. Learn it, get really good at it, focus on it, and go all in. If you want to, generate wealth in something else, that's fine too. Focus on it, get good at it, and go all in. I think the mistake that people make is they don't get really good at something and truly understand it, and they also don't give themselves enough time. Because even if you
Yes.
go into real
Definitely
estate, you may
time.
not make money right away. There's shit that's out of your control. EX, you own a lot of rental properties and people stop paying you rent during COVID. Well, what do you do there, right? You're kind of shit out of luck. You can't
Mm-hmm.
also kick people out, kind of messed up. Maybe the laws prevent you from doing that as well. But everyone has ups and downs. Doesn't matter what industry you're in, but you just got to do it long enough and get really good at it. And that's how you start making money over the long haul. You're not going to get rich and wealthy. Forget rich. You're not going to get wealthy overnight. You're going to get
Great advice.
wealthy 10, 20 years from now. But you're going
Yeah.
to do that by focusing and sticking to one thing and get really good at it.
What would you tell the person who says, well, I can't wait 10 years? Now, think about this. They're not looking at their options. Me and you already know. Okay, you can't wait 10 years, but you're going to go
That's,
work for somebody for 30.
yeah. So you nailed it. So if someone told me, hey, I can't wait 10 years, I'd be like, sounds good. Go work for someone else and
Yep.
go climb the corporate ladder, and wherever you end up, and that's it. And be okay with that.
Mm-hmm. And so right now, you told us you're investing. You got a property now. Whether you say that's an investment or not, it's more kind of something that is a luxury that still kind of I think you'll do
No,
fine on because the,
no investment. I consider it an expense. I was breaking down to my wife the other day. I was like, honey, if we didn't own any real estate and we just paid for rent, like even in the home right now, I'm renting while my damn home in Vegas is being built. So, but like I was telling her, I was like, we should just rent. If you take the cash that we've put into these homes and you average out 9% returns in the S&P, it would have been cheaper to pay for rent on a nice home than it would be to own it.
yep.
Uh, and it's fine. I don't really care, you know.
Yeah,
I
but
get it.
long term, no, you will get appreciation in those markets. But again, it's not probably 5 or 10 years because you know what the government's doing with the money is they devalue the currency. It's intentional as they devalue the currency and everybody gets called. Now, listen, if you work for a company, they say you're getting a raise, right? But if it's the government giving you the money, they don't say it's a raise. They say it's a cost of living increase. So which one is it, right? And so by making this cost increase through cost of living, and you give everybody a raise, everything in just costs more money. Same thing
That's
with
right.
real estate. So you're in Beverly Hills. I mean, you're in Vegas. I mean, you're in two of the top markets. I mean, you got a ton of people moving to Vegas and Beverly Hills. You can't reproduce any more property. So you'll be fine. But if you want to invest in some hotels and get some returns, brother, I can help you out there too. Especially on the tax side. What we do with a lot of our wealthy investors is they maybe with their day job cannot become a professional investor because there's, certain things that you have to do to become a real estate professional. But a lot of times their spouse can. And then when you guys file jointly together, it all combines. And the losses that she creates through the accelerated depreciation, buying hotels is a big one, can wipe out your gains. And that's one of the key things that you can do. One of the things that you can look at that we look at with our investors that make over, 7-8 figures a year.
Yeah, shoot me an email. Let's set up a call and discuss that.
Yeah, I
I would
mean,
love to.
it almost comes down to like it's free because you're not paying taxes. And so it's just a math problem at the end of the day, and mathematically what works out for you. And we don't do deals that are break even. We do deals that are really killer deals. We have an $80 million project we're building in Florida right now. We're building it at 400 and something a square foot. We're able to sell that at 1,000 to 1,200 a foot. And the profit on that is going to be a major flag hotel, which is going to be worth between 40 and 60 million. So, we got all types of different strategies, man. I'd love to talk to you offline to see if that's a good fit for you.
Yeah, hit me up. Let's set up a call and let's go over some of this stuff.
Yep. And then, but the tech side, and I don't really know about the tech, but let me ask you this. You set up tech and it just runs forever. And yeah, you got to have systems and every day you got to have somebody managing it. But it seems like a lot more easier money than real estate.
Sadly, no. I don't think it's easier or harder. I think it is all the same, in which it's all a grind. Because the problem with tech is, with real estate, let's say you got a hotel in Beverly Hills. There's only so much land. There's only so many hotels. So if there's conventions or whatnot, you're just going to get sold out. The problem with software or tech, people can just keep copying you and they can be infinite solutions. Someone can undercut you in price. Someone can just say, hey, it's a free solution. You don't even have to pay for it. So you got to keep innovating. You got to keep fixing problems, making it better than the competition, marketing it. It gets more and more expensive and more competitive. But it's never ending. Even construction, right? In real estate, you got to build. That sounds like a pain in the butt. But everything is a pain in the butt. I don't think there's easy money. If someone tells you there's easy money, well, that just means it's high risk and you can lose it. Or there's something fishy and something wrong with it.
No, that's great because that's great to understand that because everything has its own challenges. But you know what I always tell people when they say, oh, it's hard. I said, man, you got to pick a different hard. Hard has to be like you're being chased down the street. Like you're fat like me. You're not very fast at running. And you got 3 guys chasing you with guns and you got to get away. That's hard. Or you're in the middle of an ocean with sharks swimming around you and you got to get to land.
You'd be shocked. If there's 3 people chasing you around with the gun, you'll find how to run really fast.
Trust me. Hey, you running down the street and you say, you passed Usain Bolt, that guy? Like,
yeah, that's right. You're going to be passing Usain Bolt and you're going to be you're going to be Olympic speeds at that point.
Hey, so what's next for you? I mean, you've accomplished so much. You never have to work another day in your life. You got enough stuff. What is next and what continues to drive you?
So I have an ad agency called NP Digital. Focus on that. I love it. And continue building that out and expanding more internationally. And that's what we've been doing.
So you say expanding internationally, you're just expanding the existing companies that you got?
Uh-huh. So right now we're in India, Brazil, UK, Canada, Australia, US, of course. We just signed up someone to lead our Germany division and office. We're now looking for France, Italy, Spain, Portugal, Netherlands, and then we're also looking at Singapore and Malaysia right now too.
Now, do you
And then
put
we're looking
up?
to lead up LATAM, all the Spanish speaking ones, because we already have Brazil for Portuguese.
Wow, that's awesome. That's amazing, brother. What do you ever raise money or I mean, how do you get your money for your projects? You just fund it yourself, or you got your own investors?
I used to raise money years ago when I was younger and I started off, but I don't know how long it's been since I've raised money. I haven't raised money in ages. All my current companies are self-funded, so I just use my own money.
That is awesome, brother. Man, well,
I,
congratulations
I,
on all the success, brother.
yeah, thank you. I just don't like dealing with investors. It's easier to just do whatever you want on your own than it is to have to deal with investors.
Yeah, and with tech, you guys got them crazy margins. For us, we use our own money sometimes, but it's easier for us to scale using investors. Finding investors saying, what kind of solution can we provide for you? And providing a solution for the investor. Now it has to be a win-win. We have to be able to get them what they're looking for. If not, then, we don't, I mean, we just tell them straight up that we don't think we're a good fit for you.
Well, you're in a business that has high capex, right? So
Has
I'm in a
high
business.
capex, but we are very good at running properties. And I would have rather get a higher leverage point and have more money sitting aside where then have a lower leverage point and not having enough. Because when you go through these turbulent times, you may not be
Yeah.
able to pull equity out of that property. And so we look at our capital budgets and we look at them every quarter, but we look at what that property is going to need over the next 5 years. And we're usually capitalized for the next 5 years when we buy a property. So every capital item that can go wrong is already budgeted for. That way, when something breaks, you don't say, oh my goodness, we had a flood. Well, we knew it was going to have a flood. We looked at the floodplain. We knew we were going to have that. And actually, we're vertically integrated. We have our own water restoration company too, because the margins are so high on that. We try to control the cost. You've got about 80% margins on water restoration. But I mean,
But
again, man, I'm passionate about what I do. You're passionate about what you do.
yeah,
But there's one thing that me and you both know, right? That when you fail, you are learning. When you
yeah.
quit, you lose. And so you got to keep going and you got to hustle and you got to hustle harder and you got to figure out, how can I do 5 years worth of work in 6 months? And that comes down to processes and systems, right?
You really do need the process and systems to scale. But no, going back to real estate, it's funny. Everyone says tech is better, real estate's better. They'll have its pros and cons. You have high capex, but you also have high leverage and it's more stable. Tech, you don't have as much leverage, but you have really low capex and you have great margins and great
Mm-hmm.
multiples. But it doesn't mean one industry is better than another. It's just more so you got to figure out what you love, and everything has its pros and cons. I wish I could get the leverage that you guys get in tech. It just doesn't exist.
Well, you probably could, but then you have to give up. So we give up equity, and equity is very expensive. But we like to see our investors do well, because
Or,
for
or I mean,
us,
the bank
huh?
size, right? So, like, I mean, from a bank aspect, if your company or if your real estate portfolio was worth $100 million and it produces 8% returns, you can put 20% down or 25% down. The bank will finance the rest. My tech company, was worth $100 million, and it was valued at 10 times EBITDA. I'm making this up, and or let's call it 11 times or something like that, so you get close to the 8% return, right? The What is it, or is it more so 12? 8 times 12, I think it's 12. Yeah, so let's say it's 12 times EBITDA. The bank isn't going to let you put 25% down and buy that business, right? That's
Mm-hmm.
what I'm
Mm-hmm.
saying. I wish we had the leverage opportunity, and you guys can get, you know I think in what commercials, 25-year loans, is it
Yeah,
25?
20 to 25 year AM. Mm-hmm.
Yeah, we don't get that kind of stuff in tech. It's
Would they
just
give you
like,
10 years?
no, 5 years,
Oh,
7 years,
wow.
10 on the high end. 10 is lucky, but
Yep.
it's usually 5 to 10 years.
Well, it's a little more risky, but you
It's
are
a
an
lot more.
expert in what you do. So that mitigates the risk, because ultimately the project hinges on you. And as long as you're involved, it's gonna be successful, right? Unless you say, you know what, this one here we're gonna combine with this, right? Because it's not work. And so you're ultimately in control of your own destiny, unlike a lot of the beginners. And so, anybody who wanted to start doing what you did, where would you tell them to start at?
Just go and read whatever you're interested about and go and execute what you ever learned. So like if you want to learn marketing or tech, there's a lot of sites like TechCrunch that you can end up reading, and you can go to YouTube, learn a lot, and just go and start executing. You want to learn marketing? I blog a lot about that stuff on neilpatel.com. You can read about it, but the key is go and execute whatever you're learning about.
So if you want to become wealthy, don't necessarily need college, right?
Yeah, college has nothing to do with if you're going to be wealthy or not. That's
well, I think college will keep you from reaching your goals a lot of times because you get comfortable. Somebody will give you a job, and for me, nobody would give me a job, so I had no choice but to make it. For you just started grinding at 16. You got your own company, which is just amazing. And how many people look up to you. You are just amazing at what you do. You've inspired so many other people, and you've created so many other millionaires and multimillionaires. So for the young kid that's sitting here, he's lost. He's thinking about going to college. He wants to go to college because he thinks this is the only way out. You said TechCrunch is the name of it?
Yeah, TechCrunch is a website that people can end up reading to get some feedback on tech and what's happening in the industry. YouTube, you can end up learning quite a bit as well.
And then where can they follow you at, though? Where can they get your advice at?
neilpatel.com.
neilpatel.com. And the name of the book again?
Hustle. And my ad agency is called NP Digital.
Neil, I want to thank you so much for being on the show today. I greatly appreciate it, brother. Man, you're the best at what you do, and I really appreciate your time, brother.
Yeah, thanks for having me.
Thanks for listening to Lever Up Your Life. If you could do me a huge favor and go lever up my reviews, leave me a 5-star review. I appreciate it. And if you guys want to keep the conversation going, reach out to me on Nate.Barger on Facebook, Instagram, TikTok, and YouTube, and get in our free Facebook group. We got over 200,000 members. BRRRR Invest. We'll see you in the next episode.